welcome to this FireSide Chat. Today we have with us our special guest, Mr. Hiranand Savlani. He's the Chief Financial Officer of Astral Limited. So this company needs no introduction, but this company is one of the leading manufacturers of PVC pipes and was the first company to introduce CPVC pipes in the country. And today it has got a market capitalization of nearly 37,000 crore plus. This stock or this company has been a 100-bagger in the last decade and has never disappointed investors with its performance. Thank you very much, sir, for joining in today. Astral has delivered a phenomenal growth rate of nearly 20% plus in the last 10 years. Much ahead of its peers. In FY21, you have ended with the highest turnover, highest margins, highest profits. So would you continue to outperform the industry, and what kind of sustainable growth rate one can expect going forward?
So I think you rightly said that our history is great and we are quite confident that we will be able to maintain that history. But of course, you also have to understand that now the base is getting wider. So on a higher base, giving 20% plus kind of top line growth will be a challenging, but we will also try for that. But management side, I think we have given the guidance to every investor that we are targeting to double our top line in next 5 years. So indirectly, we are saying that we will be giving 15% plus kind of growth in the next 5 years. Of course, short-term growth will be very difficult to quantify because a lot of challenges are there in the market. But from the long-term point of view, investor, I think doubling the income in next 5 years should not be the challenge. And that is what the history of Astral, that whatever we communicate, we always communicate conservative to our investor. So keep trust in the management. We will be doubling our size in next 5 years time.
Sir, the company reported an all-round performance in the March quarter with consolidated revenue growth of nearly 80-odd%. And again, the performance was driven pretty strongly both in piping as well as the adhesive segment. Now, what we are anticipating is a lot of stress because of the COVID-related restrictions recently. Now, so how do you see this scenario sort of impacting you and your business in the Q1 and subsequent quarters? And do you expect H2 to be far more better the way other corporates have been guiding for?
So you rightly said that the last year the performance was all round. Whether you pick up the infrastructure pipe, whether you pick up our normal regular PVC, CPVC pipe, you pick up our adhesive and sealant, you pick up our overseas subsidiary. Across the board, the demand scenario was fantastic. Even Indian housing was performing very well in the last quarter. But all of a sudden, this small hiccup has come by way of lockdown in the month of May. So we are of the view that these are the short-term kind of problem. Last year also, we have seen that lockdown came in the month of April and subsequently we bounced back. And that is what we are expecting this year also. One thing is good, sir, I can tell you, Pankaj, that this year lockdown is not 100%. So today also our sale is happening. Very honestly speaking, yesterday also we have done 7 crore rupees of sale. So sale is happening, but not at the pace what we forecasted. So this is the best thing. Plants are all working. Not a single plant is shut down. So that is the best part of this time. And we have created a reasonable inventory also. So any pent-up demand will come in the coming month, which we are expecting that once the state will reopen, the pent-up demand will be there. Because inventory level is very, very, I can say 10-year low inventory there in the system because PVC prices are at the peak and everybody was expecting that the polymer price will drop and little bit Reliance also dropped. So there was a fear factor in the market. So no dealer and distributor were ready to keep the inventory with them. So now when the demand will come, they have to rush immediately to us for refilling of their stock. So we are quite confident that temporary 1 month is not going to affect our full year's performance. So we will delivering the good number in the coming time.
Within segments, if I have to talk of piping as a segment has delivered double-digit revenue growth. But going forward, which of these sub-segments, is it PVC or the CPVC or the adhesive? Which one is likely to grow more? What kind of revenue contribution it could have? And which one is your better margin business or a better ROS business?
So I think growth we are expecting across the board. We are not expecting that this division will give us the higher growth. Of course, the division which has the lower base, they will give higher growth in terms of percentage. Like plastic storage tank, which has a 5,000 crore opportunity. Astral is just doing the beginning of the journey. So definitely that in percentage term we can count maybe 500%, something like that. So that's not the right way to evaluate the number. Similarly, infra side, the base is low. So there also the percentage term growth will be very high because government is going to spend a sizable money this year on the infrastructure. And every economy, when these kind of challenges are coming, pandemic kind of situation, every country spend more money to create a more infrastructure to kickstart the economy. So that is what our government has already forecasted and given in the budget the numbers also. So that division will also do well. CPVC and PVC anyway is doing very well. And the best part of that division is that in India, almost pre-COVID, 35 to 40% of the business was controlled by the unorganized player. And today, the size of that business is close to about 33,000 crore. So 10 to 12,000 crore was controlled by unorganized players. Now, because of this wave one, wave two, a lot of unorganized players are under tremendous stress. And secondly, there is a sizable increase in the polymer price. So because of that, it is very painful for an unorganized player to allocate additional working capital. PVC price has gone up from 70 to 135 rupees. So it is very difficult to allocate the double working capital for any smaller player. So that is also going to help us from a shift from unorganized to organized side. Secondly, a lot of organized players, they are also facing problems in the system because they don't have additional cash flow with them. So the companies which are facing liquidity crunch, they are also not able to grow in this environment. So it is a clear win for the players who are having a reasonably cash flow with them and having very good brand presence. They are going to grow. And that you can see in the last quarter number also and the full year number also. Last year, CPVC market degrown by 16 to 17% at a country level, while Astral had delivered a 4% volume growth. So that is clearly showing that we are taking the market share from unorganized to organized. Similar the case with adhesive also. Adhesive also you can see that our peers were not able to grow last year while we have grown 26% in our top line. So we are taking the market share from the unorganized side. Similarly, in our overseas operations also, we are taking the market share because there also the local demand is very good and now UK economy has just opened up. So there also pent-up demand element will be there. So UK will also give us the good number in the coming time. So I can say across the board, the demand scenario will be good. One more thing I can tell you, Pankaj, that this year we are going to add 3 locations from where we are going to manufacture the pipe. So far Astral was dominating West and South market. Now we are entering into Northeast market also. So 2 years before we have put up a plant in North. And now this year, our East plant will be ready and 2 more locations which is going to be added, that is in Sangli and Aurangabad, which will take care of the central India. So now we are going to cover the pan-India in a big way. So we are very positive as far as the demand scenario and our growth of the company is concerned.
And so you mentioned about government spending on infra. Government had come up with a scheme called Nal Se Jal, and we have seen a good amount of allocation for this scheme in the budget. Do you think a scheme like this can sort of enhance the long-term growth trajectory of the pipe segment?
I fully agree with that. It is not only Jal Se Nal. Pradhan Mantri Awas scheme is going on. Low-cost housing is going on, which there a lot of developers are getting tax incentives and all. So all these things are going to support the pipe industry. The kind of number which government is talking about, Jal Se Nal and all this scheme, that is mind-blowing. Even I can tell you 25% or 30% of that will be allocated this year, and then itself is a good number for the pipe industry. Because normally all this government projects, smaller players supply, but this time smaller players are not there in the system. So because of that, sizable business will go to the organized player. So that is going to be really a good for the piping industry. But keep finger crossed when government is going to allocate the money, that we have to understand how fast they are going to allocate. That also we have to monitor. But if the number what they are talking, if that is going to be delivered from the government side, I'm sure all the organized players will be doing excellent work as far as the growth is concerned.
You mentioned that there has been a sharp appreciation in the raw material prices. So how are you managing such a sharp rise in raw material? Would it sort of dent your margins or a bit of a demand, or are you expecting a combination of this? Or what kind of sustainable margin guidance can we sort of look going forward? And do you think if the prices have gone up, would it sort of tilt the demand more towards CPVC side compared to PVC side, because the pricing gap between the two could sort of come down?
So you are right that the raw material prices are continuously going on upward trajectory. And best part of the piping industry, I can tell you that all the big players have set the system in the India for many years that whenever the Reliance increase the price, they pass on to the market. And whenever Reliance decrease the price, they pass on to the market. Both sides. So that is the best practices industry has adopted, and that is where every players are safe. So whenever price goes up, everybody pass on to the market, and that trend is set. So nothing to be done new. So this time also, everybody has sensibly behaved, industry player, and whatever the price rise was there, they are passing on with the market. Maybe little lag effect. Maybe somebody is passing on after 1 week, somebody is passing immediately. Depend on their inventory position. Based on that, every individual company is taking. But everybody is passing to the market. So that is the best thing which we are observing in the market, and I'm sure that this trend will continue in the future, because this trend is not today, it is established for more than decade. So that is good thing about the piping industry. So we have also passed on. That is why you see in this difficult time also, when so much of the price rise is there, you see we have maintained our gross profit margin. Not only we have maintained our gross profit margin, but we have improved sizably our EBITDA also. So this suggests that it is not going to affect big way to the margin. But if the other way around will be there, if the price will start falling also, then there will be some problem into the margin, some reduction will be there. That is why we never say any investor that 20 to 23% kind of margin is a sustainable for the long-term point of view. So we never say. We have given the guidance also in our presentation that we will be giving the margin on a higher thing. So that is the sustainable kind of margin. These are the abnormal margin because it involves inventory gain also. So we have to remove that inventory gain because that cannot be a permanent kind of phenomenon. So that is that. Secondly, in adhesive side of the business, that is also the same scenario that we pass on with the lag effect. And that is why you see that in adhesive also our EBITDA margin has gone up in spite of price rises there in the system. But there little lag effect is there because there the smaller articles are there and MRP based products is there. So it cannot happen overnight like what is happening in the pipe within a 2 day, 3 days. But here little lag effect it is passing on to the market. And that is why we are able to maintain our EBITDA margin. Not only able to maintain our EBITDA margin, but we have grown up EBITDA margin because of the economy of scale. So that is the advantage to our company. Regarding your third question, shift from PVC to CPVC, you have absolutely understood perfectly. When the price gap getting narrow, PVC has gone up from 70 to 135, while CPVC has not increased the price. So because of that, the gap has come down substantially. And now more or less you can say both the prices are in a same zone. So when you are getting a good polymer at a right price, why not you move to that polymer? Because in all respects, CPVC is a better polymer. Because all the properties of CPVC are better than the PVC. So many of our customers will move to the CPVC side. One more thing I want to highlight for the interest of your investor, that CPVC and PVC in India, the volume difference is 25-30% because India has adopted PVC ASTM standard and CPVC they have adopted CTS standard. So the weight of the two pipes are CPVC is 25-30% is lower and PVC is more weight because the thickness of the pipe of PVC is more and CPVC thickness is less. And normally India is using the pipe in feet or maybe meter. So if you pick up the 1 meter pipe of CPVC and 1 meter pipe of PVC, the weight of PVC pipe will be 25-30% higher. So because of that, today CPVC has substantially come closer to the PVC. So I'm sure many of our customers will move to the CPVC. It is good for us for the long-term point of view, but it is not good for short-term point of view because I'm going to lose my volume. Definitely, I'm going to increase my profitability because CPVC give us more profit. So it is going to improve my profitability top line, but I will be loser in volume. But that's okay because we are not looking the industry or our customer from a shorter point of view, but we are looking for our customer for a longer term point of view. So we will allow that part.
Absolutely, sir. And sir, last question from my side would be that what are your capex plans to sort of sustain this industry-leading growth? And you have decent amount of cash on the books. So, what kind of payout ratios can investors expect going forward?
So I think your second question of utilization of cash, yes, definitely. Right now we are keeping cash with us. So because of that, we are still struggling what to do for that cash, because we have not taken a final decision whether to go for an inorganic growth, whether to go for the uh, inorganic or organic side. We are working, because we are working for multiple products, and we are evaluating which are best in the interest of the company and interest of the shareholder, because our policy is very clear that we are going to deploy our cash where the opportunity, whether inorganic or organic, minimum 20% should be ROC. It should be leveraging our brand Astral. We will go only to that kind of product which leverage our brand Astral. And third thing, it should leverage our network, because Astral network is very, very vast, because we are having 33,000 dealers with us in Astral and close to about 130,000 dealers in our adhesive business. So we want to bring a product which can leverage all this close to about 163,000 dealers. So we will bring that kind of product only, and there only we will deploy our cash flow. If we are not able to find out that kind of product or that kind of opportunity, definitely we are the trustee of shareholders' money. So we will give back to the shareholder by way of dividend or maybe buyback, whatever it is best in the interest of the shareholder at that point of time, we will take decision. But right now, because of pandemic, we want to keep the cash with us, because something goes wrong. If we are sitting on cash, that will support the company. So that's why for a shorter period, we are holding that cash. But definitely we'll come up with the solution whether we are going to deploy or not. Regarding your second question was regarding the capex. I think, Pankaj, if you see, our capacity utilization is just 55%. So we don't need capex at all. But because we are decentralizing our manufacturing unit, and we are going into the east also, we are going into the central India also. That's why we are spending some money on the capex side. Otherwise, we don't need any capex. Once this expansion of east and the central India will be over, I don't think near term we are planning to do any expansion activity unless I communicated. If we will bring something new product, then definitely we are going to spend money. Like recently we acquired the plastic storage tank, we spent 75 crore rupees into that, because there the opportunity is good and we can definitely take care of all our criteria which I explained to you. So unless and until right opportunity will not be there, we are not going to spend money. And capex, I think, will be very light in the coming time, except completion of this east plant in the central India. We are going to spend maybe 150 crore or so, and some capex will be there in the plastic storage tank also. So close to about 150 crore capex we are planning for this year, and from next year onward, the incremental capex will be low, except for the new product. Capex will continue.
Thanks a ton, Mr. Savlani. So, to sum up, strong brand equity, industry-leading growth, I think so that is probably going to help the company sustain shareholder wealth creation in future as well, the way you have done in the past. Sir, it was pleasure interacting with you today. Have a good day.
Thank you, sir. Thank you for inviting me. Thank you.